Hi, welcome to the Market Alert for Thursday, the 19th of October 2023. So yesterday we had the inflation numbers out. Rate of inflation stuck at 6.7 despite first monthly fall in food costs since 2021. So maybe next month it will be lower, but it came out as forecast there. Meanwhile, in the US, stocks purged as bullion and bonds yields surge on Biden, Beijing and banks. Is gold the new fear index? Well, I hope so. And US stocks declined amid earnings releases and geopolitical risk. Asia Pac markets open and stocks finding a bit of support there. Economic news for today: we've got unemployment claims at 130, then we go to the Philly Fed manufacturing index, then we've got existing home sales. Powell is going to be speaking at 5 p.m. and FOMC member Harker is going to be speaking at 10:30 p.m. Okay, let's move along, have a look at the markets, kick off with the Dow, work our way through to the metals for yesterday's trading. And in the Dow, you can see there the 34099 has been a problem for this market, and we had the supply seen by the S there on on Tuesday. Wednesday, the market lower, down towards the 20 bar moving average there. So some selling around there, that's a huge amount of volume that's come out of nowhere. So a very interesting bar for yesterday in the daily chart. In the 30-minute chart, it was choppy. It was up and down in 100-point range. Then the market capitulated and gave up and went lower. It did try to come back off the DP in the S1, but eventually, like I say, had to relent and has traded down to yesterday's low, where it's found a bit of support at the moment. The question is, can it hold at this level, or is it going to take out the low as seen by the selling in the daily chart and then continue to move lower down to this sort of level here, which will be 33,453 as the Middle Eastern situation starts to escalate. In the German DAX, down at the 89% retracement, the short up move that we had is now gone. Market's been sideways, but yesterday managed to break the low and has continued lower overnight as well. So there you can see that we started off with a bounce to the upside. The market failed. We took out the DP and then we bounced again another 50 points and down we went to the low. The market tried to come back, made an attempt here in the afternoon, but continued and has continued through the low of yesterday as well, where it's trying to now make its way back. So again, interesting, this weakness in the background with these markets. In the S&P 500, stuck in a sideways range still, doesn't know what to do with this war. Normally you'd sell off, then you would get a bounce and then the market would drive to the upside because of the profits that can be made by the manufacturing companies and also obviously politicians awarding contracts, but let's not go into that. Again, huge selling in the S&P 500. The market likely to test, it's already tested yesterday's low. If it does that and goes through, then we've got 42,957 there. 30-minute chart, just like the Dow, choppy, as you can see there, but still moving to the downside, trying to be brought back, but then still selling off. Markets found support at yesterday's low and bounced off this so far. It will certainly need to clear the 20 bar moving average and yesterday's close if it's going to move higher. If not, the weakness will continue. And in the FT 100, a down day for the market as well, probably the inflation news. There you can see huge volume again, and price is currently below the low of yesterday and also finding a bit of support at the 50 EMA there. So let's have a look in the 30-minute. Yeah, you can see they're trying to bring the market back above the low at the moment, but yesterday after the inflation numbers, the market down, back up to the close, and then all the way down for the rest of the session sideways, but overnight you've got the market breaking the low but coming back and retesting it there. In the US dollar, the market sideways to higher, so trying to make its way back at the moment. So let's have a look at the impact of this on the metals. And in silver yesterday, again we can see some selling in the market. We're overbought, we're near the 200 MA as the market got the impetus to actually break through this 89 at 23.23. We'll just have to wait and see. So yesterday you can see what they did. The London fix smashed the price and then brought it back overnight. We're above the low at the moment. We'll just have to see if the market can manage to muster any more strength on the upside, but it's starting to look a bit grim for the silver market once more. Gold, on the other hand, moving through the resistance to the left, which is at 1952.83, which is good to see. May drag silver along for the ride. And in the 30-minute chart, you can see the difference, barely marked down here compared to the silver market, which was crushed. So that's going to have an impact on the gold-silver ratio. So let's take a look at that. And there we can see yesterday the gold-silver ratio moving back to the upside with the sell-off in the silver market. So yeah, we'll just have to wait and see if this manages to hold there. But we're still in that 85 range. It should be down about 15. So it just goes to show you how suppressed the price of silver really is. Okay, that will do it for this one. If there's anything else happening or comes out of the blue, then I will let you know. But otherwise, as ever, thanks for watching. See you in the next.